By the
I've
way,
watched that movie.
when we were in France, one of the tour guides that we had, said she'd only been to the U.S. once, and when we asked her if you wanted to come back, what are the things that you most are looking to eat in the U.S.? And I was very surprised by her answer. She said, "There's two things I really want to eat when I come to the U.S. U.S. style macaroni and cheese." So that's a pretty good one. I like macaroni and cheese. Number two, s'mores.
This is France.
Yeah, that's what she want. I
And
say her
she,
top two things that she
interesting.
wanted to try.
That's interesting. I actually don't like s'mores. Makes your hands too messy.
It's the best part.
That doesn't make any sense. The energy of what you're saying, I understand because that's how I feel about wings. Like when I eat chicken wings,
Yeah,
I know what I'm getting myself into.
right,
But for
exactly.
some reason, I don't have that same mindset when I eat a s'more.
Well, one's easier to clean than the other, right? S'mores is very difficult to get that stuff off your fingers.
Yeah, that's what it's a stickiness, dude.
Well, just bring some wet wipes with you and you'll be good.
No, I'm not gonna do it. Should we have s'mores? We should do a s'mores episode.
What does that mean?
What do you think it means?
You want to just eat s'mores on TV?
What? Yeah, except this isn't like quite TV, my man.
You want
We
to
have
eat
desserts,
s'mores
desserts
and your talk
episode.
your chart?
Jones will want to be there for that, eating s'mores.
Everybody would. S'mores are the best.
S'mores are not the best. We're gonna take a poll in the office, and you're gonna see that it's not the best.
Well, then why don't you toast your marshmallow a little less? Make sure you get your nice handle on the graham
So
cracker.
here I'm gonna continue down the path of not a fan. I don't like marshmallows either. So I need it to be like gooey enough to like not be a normal marshmallow. A marshmallow is the most purgatory freaking dessert sweet thing ever, dude. It's like a fluffy ball. It doesn't work. I
Oh,
don't
we're
get it.
losing all of our audience. Oh my God, we apologize.
Marshmallow. We're not. Peep. How about peeps? You know what peeps are?
Peeps are great.
Peeps are a marshmallow covered in sugar, and they're not very darn good. You want a peep? Mm, no,
Something must have bad happened to you on Easter, and this has now caused you to hate marshmallows.
no. I'm telling you, man. Just marshmallows don't are not a thing. Welcome to episode 44, I believe, of Talk Your Chart. We are recording today on October 16th, 2023. BH, welcome back. Nice to have you back.
Thank you. Vacation was great, but I missed this. The gang's back together. We got to give the people what they want. A great episode. Last episode was good, but I think we can improve on that.
Yeah, no comment. Good to have you back.
Lane did a great job filling in, I have to say. So I thank you, Lane, for your part in helping out to make sure that we continue to do these every other week.
Yeah, he's a learned, well-spoken young man, so we appreciate him for being here with us. I want to talk about inflation. Quick check-in. There's a chart that we have up. Viewer, you're probably going to be able to see almost none of the figures unless you have 2015 vision. Uh, but what happened last month's print of inflation, Bret Horowitz? It was a little bit hotter than we would have loved. I don't want to talk about the year over year. I just want to talk about the month over month because that matters more. Year over year, remember, compares this current month to last year's. It's a long time. Month to month is quite literally just last month to this month. We got a 0.3 on core. We got a 0.3 on the special services PCE, X housing, blah, 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 with the Fed loves, and a 0.4 on headline. Where do we want that stuff? We really want it at 0.2. So it's cooking a little hotter than what it was in the past 2 months. Why? Because of gas. And the more surprising one is because of housing. I want to read a little thing on housing that I thought is just a little nugget. So housing inflation ran at an average annual pace of 5.9% from February through August. Okay. That jumped to 6.9% in September. So that was one of the big pieces. Remember, housing, which is functionally just rent, is 42% of the basket. This is likely to be a blip in an otherwise strong downward trend, and we'll probably see a reversal over the next month or two. Data from Apartment List shows that market rents have been falling for a few months now. Official data has a long lag to market data, but it does eventually follow it. So fingers crossed, we should continue to see disinflation in the housing data. Thoughts?
Well, I don't know how they do the rounding, right? To me, like we're splitting hairs over 0.2, 0.3s, because maybe like they round up or down. So it's 0.24 versus 0.25 and one's 0.2 and one's 0.3. Like, I don't know. I don't think it moves the needle that much. As we
When you
see it,
annualize it, dude, when you annualize it, it's a big difference.
well, not if it's 0.24 versus 0.25, right? That annualized is not a big difference.
Oh, God. Okay, got you. Yeah. Oh, wow. You're
So
really Price is writing them.
no,
Got
but
it. Okay.
we don't know. Like, I don't think anyone comes out. The market didn't react like, oh my gosh, we're back to like 6% inflation. Like, to
No,
me, it could be a
you're
very
right.
modest difference. What I'm most excited about is that the core inflation year over year has come down month after month after month for like the last 5 or 6 meetings or 5 or 6 readings. So to me, that's more important. And I think it still puts us on a pace of we're not seeing inflation ramp up. Maybe it's not coming down as fast as we'd like, but it still suggests what the Fed is doing is working, albeit slowly.
Oh, yeah, it's in a break. I just a quick note there, though. You said core inflation is down. It's actually up from the June, July readings, right? So August, September were 0.3s instead of 0.2s.
No, I was looking at year over year. So the year over year has come down 4.9, 4.7, 4.4, 4.1.
I was saying month to month. All right,
I know.
fine. Jeez.
You
Okay.
can find the hotter data points, and I can look for the cooler data points.
All right, fine, dude. Fine. Real complimentary. This rolls into be something that matters to everybody, which is even though it doesn't look like a recession is going to happen, I'm still calling it for it to start in Q4. Why does it not look like a recession is going to happen? Because the economy is booming, it's banging. What makes up about 75, 80% of the US GDP? Spending. How do you spend money? You got to make money to spend money. Um, Real wages. So inflation's been terrible and it's been reflected in wages because real wage growth has had 25 consecutive months of negative real wage growth. That's not awesome. However, we've had 5 in a row of positive wage growth. So hopefully that continues for everybody, which is a combination of of inflation being down, obviously, but people getting paid what they're supposed to get paid. However, that whole wage price spiral thing is a real thing. So you can't have wages just going up for fun forever. Hashtag Social Security 3.2% bump this year.
Yeah, it's surprisingly lower than what I think I thought it would be, and certainly a lot lower than like the 9% number, 8.5% we got last year.
But that's just based off CPI, dude.
Right. But the thing is, though, the negative number, you don't want to see negative numbers either, right? To see negative wage growth is
No, no,
not
no. Yeah, you don't want that. No. Which we're not getting. Which we're not getting. We're getting quite
we
the opposite of that. Just now
we've had
inflation
for a
looks lower.
while, and now it's finally gone back to be sort of around positive. I
Yeah.
mean, look, if wage growth is negative 0.5% or something very close to inflation, inflation is falling, probably not a big deal because wages, don't typically tend to go down. They go up and up and up. And inflation typically does the same thing, but there could be times where you got deflation in there as well. But overall, I think this is what's really the Fed is really looking at is to make sure that the wages do not go up too fast because that's something that they have a hard time controlling without unemployment rising.
Yeah, I agree. Jobs are down from a high open job openings down from 11.6 to 9.6 million. So that's going to help.
Well, one of the other big stories that came out over the weekend, this was last weekend, was all the fighting going on in Israel between Hamas and Israel. So what I have here is a chart showing what happened starting on October 9th, which was the Monday after when the market opened, after all the fighting and bombing and killing, all the way through the end of the week. And you can see that the market was up about 2.8% for those days. I had a lot of clients who called or emailed to say, what is going on? I thought the market would be tanking right now. This is a travesty. It's an absolute abomination. Like, I'm scared. The world could be going to World War III, which is certainly possible. Like, what are your readings on this? I have my own thoughts, but I'll let you start as to, what do you think the market was up after all that destruction?
Oof. I think the market quickly priced in what global leaders were trying to do, and while everyone in their right minds supports no more bloodshed, I think the lack of escalation, at least to this point, was helpful. And the reality is, how terrible as it is, the economy is not trying to discount humanity in this whole thing. It's a pure numbers game. So the economic impact of what this looks like is just not there yet. Right now, it's just Israel and and Gaza, like, and that's terrible. But economically, the market has less uncertainty around how to price that in. If this becomes a two-front thing or an Iran-Israel direct thing, then all bets are off and something else has to get priced.
Yeah, I agree with you. The to me, it's not a big economic story as yet. It's a horrible humanitarian story. But right now, it's not like it's affecting Amazon packages showing up on my doorstep every day, or going out to eat, or the American consumer, or even the worldwide consumer changing their habits. It could get there if lots of other countries get involved and this thing escalates. But I think it's the market saying we're pricing it as a very low probability. The other thing I think is that that's only one story, right? What's also happened over the last few weeks, we've had earnings from lots of companies. We're in earnings season from third quarter. You've had a lot of good earnings out there. And so you can't just look at one thing in isolation and say market should go down, because there's other news that are out there. There's other things that are competing with that. And so some of those things could offset the negative that was happening in the markets.
Yeah, game on.
I have an interesting chart that I want to switch dovetail to, talking about sort of baby boomers and the older Americans who probably make up a decent chunk of our listeners on the show. So I got a couple of stats here I want to lay out for you. In August, 17.7% of the population was 65 years of age or older, the highest going back to 1920. And up from 13% in 2010. Probably not surprising, because we know baby boomers are making up a larger and larger share of the country.
They're huge. Yeah.
In addition, those Americans over 65 are now accounting for 22% of all spending, which is on this chart here on the middle one on the left. The highest share since records began in 1972. Go baby boomers.
Wow.
They've amassed now $77 trillion in wealth. And what a lot of commentators are saying is that it's hard for the economy to sink when those baby boomers do not have a lot of debt. They likely have a house that's paid for. They likely, if they have a mortgage locked in at a low rate. They're not looking to move. And so I think the impact of the inflation and the rising debt costs are not affecting them. So I think given their high share of spending and the fact that they don't have the issues that a lot of people have, that could be sort of a buttress to why the market and why the economy might not fall.
Yeah, congrats, mom and dad. I guess their share of household wealth went up so much because they were the only folks not buying Bitcoin. Okay, good for them.
I don't know if that's the case, but that chart on the right is pretty dramatic, that scale up of household wealth, right?
Yeah, it looks a little silly, but I guess that's just what happens to the old generation. The problem is, and I got parents that are that age too, but we need more young people. You know what? I think everyone should right now just stop what you're doing and go have another kid, because that's what the U.S. needs.
Well,
right
for
now.
sure.
More babies.
65-year-olds are not going to help with that, but everybody else can.
No, man, no. At least you're not a big drain on Medicare. Oh, whoopsies. Yep, that's not good either.
But look, the 65-year-olds can also marry somebody who's in their 30s and still have kids, right? It's just only one side.
That's true. Look, it's science. It's just science. Okay. All right, yeah, that's interesting. That I can't believe that blue line, the spending one, it's 05. You said that was from 1972 to now? Jeez.
Yeah,
okay.
the chart only shows from 05, but it said it was the highest number since 1972.
Okay. Wow. Game on.
So,
all right. Good job, baby boomers. You talked about earnings. Banks have been good. I want to talk about margins. I read an interesting article by our good friend, just kidding, I just read his stuff, Sam Rowe. He's got a good blog. Basically, he points to the fact that margins do a good job of explaining every macroeconomic narrative in existence. If you look at margins, meaning how much companies spend versus how much they actually get to keep, how much they earn versus how much they get to keep. The demand side of the economy plays into that. Inflation plays into that. Labor dynamics play into that. Capital expenditure plays into that from a productivity perspective. And interest rates all play into that. So he's basically just trying to make the case that just watch margins, especially as you had closing out 2022 and opening into 2023, this idea of, man, there's going to be a terrible earnings recession that ultimately lasted like 2 quarters, but it was like a quarter and a half because it was barely. And then guess what happened? Right back to making more money. And what happened after at that same time? Yeah, margins contracted a bit. And then what happened right after that? They started expanding again. And guess what folks are expecting to happen again? Margins to expand again. So look, man, just don't bet the economic resilience against the economic resilience of large innovative companies, which is ultimately reflective of most publicly traded companies. They're all real damn big relative to the mom and pop coffee shop down the street.
I'll bet if you superimpose the S&P 500 with this chart, they would look almost identical.
Wow, you sound like a chart guy. We should
Right?
totally do that.
I mean, look, it's up and to the right. Margins up and to the right. What does the stock market do? Up and to the right. Like it is
Northeast,
this.
baby, Northeast. It's all Northeast. Yes, what I would guess is this is contracting. The market's contracting ahead of these things.
Well, yeah, because it's looking ahead, right? But I mean, the shape is going to be identical, just moved a quarter or two off.
Yeah, I just agree. So who knows what's going to happen? This is also a lot of corporate folks are getting a ton of flack for this because the whole corporate fueled inflation story, right? Because what were corporations doing? Passing on higher costs to who? Apparently the baby boomers who are still spending out of their pants. Okay.
77 trillion, that can go a long way.
I know. I'd love to inherit some of it, Mom, Dad.
Yeah, don't spend it all. I mean, leave some. Well, look, this bodes well for the economy, but there's also some stats that I want to point out where September tends to be one of the worst months in the market.
Always.
I don't know why that's always the case. September is bad. My birthday falls September, so I'm always having a scary birthday.
I wasn't gonna say anything. I wasn't gonna say anything.
Think they're correlated?
Probably, but I'll tell you this: I have like 4 or 5 family members' birthdays in September.
I always want to take off in September, and I'm always worried the market's going to fall and every client's going to call while I'm off. But what I have to look forward to is the fourth quarter, because I have a chart here showing how much the fourth quarter is up, how much of the time it's up, and what it's up typically on average.
Oh,
This
so
goes
it's the
back to
best quarter.
1950.
Wow.
By far the best quarter, 80%. I'm surprised the other 3 quarters are a little bit lower than I would have thought in the 60s. Because we know the math is that on average, the stock market is up 75% of the time. But the fourth quarter obviously makes up for so much of it. I don't know if it's people spending more in the fourth quarter when it comes to holidays.
I was about to say, hold on a second, because this screams holiday cheer. But whoever wants to chime in, listener, and help me understand what the hell a seasonal adjustment is, can't this stuff get seasonally adjusted?
Yeah, well, look, it's the same thing as if it's going to happen like this over and over again. I might as well start selling in August and start buying in October, right? Like,
You should open up your own shop whose investment thesis is based entirely on this chart.
It's a pretty compelling chart. 80% of the time you make money and a 4% gain for the quarter. That's
It's
a
like
great
Sex
quarter.
Panther, dude. 80% of the time, it works every time. It's incredible.
Yeah. I'd put money on that. I think I'd make money.
You know what? That's what this episode is going to get called. How do you make sure you show up, Lane Jones? You call your episode 80% of the time. It works every time.
There you go.
Okay, I love that. Yeah, September's terrible, but the fourth quarter, here we go. Dude, this is perfect. You set me up wonderfully for the last chart of the episode. Did you have something else?
This for a while, Marcos. I know you by now.
This is perfect. This is perfect. So, what's the market up this year?
14?
Eight. Oh, it's 14? I thought it was 18. Okay,
S&P?
maybe it's 14, 15.
I've been gone for 2 weeks. I'm really not sure what's going on.
That's fine. Call it 14 or 15 or so. I'm pretty sure that's correct. I think it did come off the 18. Okay, so what's this chart looking at? This chart's looking at what about a year from when the new bull market started, right? So the bull market started last October, right? October 12th when we hit the bottom, and we're up over 20% since then. So what this thing is looking at is going back to several bear markets, starting in 56 till the one we're experiencing now. How much did the S&P 500 change? And what did the first year after the new bull market started to look like? And the second year after. And the reality is, from October 12th of last year to October 12th of this year, 22% gain, which again is such a funny thing to know the depths of horribleness. And hopefully you didn't miss out on that. And if you did, hopefully you have a chance to recover now. More money's been lost trying to not participate in these things than just dealing with the downside of it, right? So 22% though, BH, if you look at the whole list, it's kind of not excellent because the
No.
median and the average are north of 30, right? But there's hope. Why is there hope? Because look at all the other green stuff that came after. So what is this? I know I'm going to get someone to email me and say, what this looks like is we're due for a red number. That's
No,
what this looks like.
guaranteed green.
You just said the G word, ladies and gentlemen.
There's not a single red number in that right-hand column. It's got to
I
be
know it's
evergreen.
hilarious. It's hilarious. I wish, honestly, I wish there was one. This looks fake. You know, I'm going to get an email that says, that just looks like we're due for red. I'm going to sell today. Arr.
Good. I'll take the other side of that bet.
Oh, Papa's taking the other
Especially
side.
with the fact that the recovery's been kind of slow so far, right? We haven't even made back the losses we had. That 25% loss means you need about 30% gain to get back there. We haven't even made that back. So you got to hope that this thing picks up some steam, and that now that the Fed is at or close to the end of its hiking cycle, that and with
Tightening,
earnings
that's you combine tightening and hike. That's awesome.
with earnings being good, that this thing got some room to run, and that you got a better second year than you had in the first year.
Yeah, I think the lows of the cycle were at last October. I also think I think there's an election year coming up. And if we get a new president, that's good for markets because markets love first term president.
Wow.
So if we don't, markets like that less, but guess what? They still like it because markets are generally northeast. There you go.
I'll make last comment for me is that the president's coming up more and more in conversations with clients, who it is, what it's going to do. Is the world going to come to an end? The world's not going to come to an end. We've had lots of good and bad presidents, as you look at this chart over the years. I don't know. I don't remember going back to the 1950s who all the presidents were, but people have lived through that. We've got through it. The market doesn't care. The market goes up, whether a Republican is in charge, a Democrat is in charge, Donald Duck is in charge. It doesn't matter.
So I take the other side. I take the under if Donald Duck was president. I'm going to go ahead and I'm going to call you out on the Donald
Will
Duck.
companies make money in an environment where Donald Duck is president? Yes.
The thing is, Donald Duck is notoriously greedy. We all know that. And if Donald Duck was notoriously greedy, he would try to expand the government so much he would cut into corporate profits for sure.
Scrooge McDuck? Donald Duck is greedy?
Oh, I am talking about Scrooge McDuck. I'm talking about the persona that Donald Duck plays as. It's not Scrooge McDuck because that's a Christmas story. It's the other one where he dives into the sea of gold coins.
I think it's Scrooge McDuck.
It's definitely not Scrooge McDuck, but yeah. So you're right. It's like a character Donald Duck plays.
I think Veronica's gonna have to cut this whole ending because this is horrible.
I disagree. I love it. And you keep that right there, so they know that I'm a purist, and we got some guy trying to edit the tape over here. Don't edit the tape, BH. Don't edit the tape.
How much editing had to happen last week to get your?
It only took us 4 hours to record those 20 minutes.
Exactly. While you coach Lane through it.
All right, we're a minute over or something. All right, so I'm going to bet with another green number. You're going red? Okay, on the record.
Have a good week, Marcos.
Nice to have you back.